flip-flopping in the red any time now, but let's switch our focus and get to the macros. Sadanand Shetty of Taurus Asset Management Company now joins us. Sadanand, looking at the macro environment and the confusion over what RBI should do, should not do, what kind of sector should one look at, and what kind of bets could the investors play with a medium term in mind?
Good afternoon to you. If you look at the macroeconomic indicators, there are several headwinds playing out together. That also means we are headed for a near-term challenges, which could kind of cap market multiples across sectors and companies level. What generally one should do in such period is that you can perhaps change your sector allocations and insulate yourself with some of those headwinds in a near to short term period of time. Something we are trying to we actually anticipated things coming up, and we have reallocated some of the sector exposure in our portfolios.
Okay, so what would be the sectors you think where you can at least protect your capital going forward from here on?
You see, Lata, the issue in India today not about top line growth. To an extent, as of now, we still see a robust growth coming in. The challenge is for companies in India is to maintain the margin at above operating level and below operating level in the cost of borrowing. So you could see these headwinds, sustaining for a long period of time, could eat into operating margins as well as below operating levels.
So where would be the relative outperformance?
So ideally position. If you look at the business models across companies, there are segments which still offers, a decent upside. So you can see IT sector as one. There are companies which are exposed to rural economy, which can do well. Then also one can look at, rebalance the cash levels in the portfolio and see as and when there is an opportunity comes in the market over the next 3 to 4 months period of time, one could look at buying further in the market.
Okay, what's the in-house view? Do you think that there is much downside left from here on? Or do you think that, in another 5% valuations would look really mouth-watering? Say for banking stocks, say for a State Bank of India, the manner in which it's been hammered from 3,500 all the way down now to 2,500 levels, how much lower, when would you really advise investors to go and pick?
Lata, if you look at the banking sector, since April 2010 onwards to late October, the sector has seen a huge re-rating, particularly on the price to book value. Perhaps one could corroborate that with the huge FI flow that has come into the market. The base level valuation of most tier 1, tier 2 banks have shot up substantially, re-rated to an extent of 60 to 70% kind of a times. If you look at November onwards, the entire valuation gap is kind of come out completely to the base level. And the headwinds are more pronounced today on the banking sector, clearly. So over the next 2 to 3 months period of time, you will have more opportunity to buy into these banks.
Okay.
I think there are opportunities will be available over the next 1 quarter period of time. So we could pick and choose a banking sector.
Sadanand, I'm afraid we have to leave it at that. Earnings coming thick and fast. Thank you very much for joining us. Well, banking stocks actually taking a bit of very ranged. We wind up Mid Cap Radar on